Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand, especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. These are volatile times in the stock market.
Market's up 200, then it's up 800, it's up 700.
How do you get the facts when investing?
Hi, I'm Phil Grande at philsgang.com. If you're confused about the stock market, get unconfused. Go to my site, philsgang.com, and listen to my radio show every weekday at 3 Eastern. What is the market going to do? We know exactly what the market's going to do.
Phil's got the answers at philsgang.com.
There's no need for you to be losing money.
Check it out, philsgang.com.
What, are you nuts? If the stock market can make you so rich, especially Apple and Microsoft and Google and Amazon and the rest, why are so many Americans poor? If the 401k promises you a retirement, then why is it we are in a retirement crisis? Here's the answer. Because 85% of you get out of the market too late. I fixed that with my color-coded chart, which tells you when to buy, when to sell, and when to get out. That's right, when to run like hell. Check it out. You get a free membership and the free color-coded chart for 10 days. Check it out, philsgang.com.
This message is for those of you asking the question, what do you think the stock market is going to do?
Hi, I'm Phil Grande at philsgang.com. Well, you don't have to ask that question when you listen to my radio show because you're going to know exactly what the market's going to do. You're going to know if the market's going to go up, you're going to know if the market's going to go down, or the market's not going to go anywhere.
Phil Grande and philsgang.com takes the worry out of investing.
Pay attention to my show, philsgang.com. It's fun, entertaining, and you get the greatest information, especially stock picks.
That's philsgang.com. When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand, especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. Why are investors listening to Phil Grande of philsgang.com?
You know why people listen to my show? Because I make it simple. When you talk about the stock market, they make it so complicated. I make it easy to understand. For the average investor, the Main Street investor, most of the time, these guys, like they're talking to each other. We talk directly to you and we listen to you.
Invest better with the sound advice of Phil Grande at philsgang.com. What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone. Learn off of them, one-on-one. Now, that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro, Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money, 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 money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
We've had this huge boom after COVID and all the money that was given out and spent. And so we see consumers are kind of back almost kind of normal. So they don't have all the extra money, but they have jobs, wages are going up. But if they substitute a cheaper product for a more expensive one, they cancel a trip. So you're starting to see what I put normal. Credit costs have normalized. So it's just almost back to what I call a normal environment.
That's a lot of nuts.
Wrong, 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 wrong.
And is he wrong? Unbelievable. It's amazing. Nobody really knows what's going on. And here's Powell telling us how everything's normal, getting back to normal. Normal? Let me ask you, how could it be normal? Think about it. When Trump is turning around and creating uncertainty in the market by raising these tariffs. By raising the tariffs, with the uncertainty, everybody is selling their stocks and they're going to bonds. So basically QE is starting all over again. So how is that normal? Well, let me explain what he's doing. It gets more unnormal. So Trump, when he became president, he first was going to make sure that his first duty was to get that 2018 tax cut solid. He wanted to get that as a bill. He wanted to make sure it's extended, because that's very important. Then all of a sudden, as we're moving along, we started to hear about tariffs. Well, wait a minute, what happened to the priority? The tax cuts, which we need. We needed those to be solid. But all of a sudden we flipped and went to these tariffs. Well, the reason we did that is because when he took over, there was $7 trillion debt that was left behind that is due in 2025. And he looked at that and would rates or yields at 4.4, 4.5, that would be a killer. To refinance $7 trillion for the government at 4.5%, that'd be nuts. So what Trump did, he said, wait a minute, I got to turn around here. I got to get these yields down. I want to only pay maybe 3%. That'd be great. Be doing a great thing for the country. So this $7 trillion debt that's due during 2025, so I'm going to do a country a great service. I got to get the yields down. And that's what he's been doing. So how do you do that? You got to put fear in the market. You got to put uncertainty in the market. And what better than tariffs? We've seen that. Some mornings we wake up, the market goes down 600 points. Next day it goes up 200, it's back down 700 because of fear of tariffs. So Trump was wise to put that fear in so that everybody would be dumping their stocks, and the big institutions dumped already about $250 billion worth. And so that's what you're seeing right now in the market. That's why this is going on. But the problem is, you got Biden, or Powell, sorry, on the other side. He's doing the opposite. He's doing quantitative tightening instead of easing. So he is fighting Trump with tightening, with higher yields. So how can Jamie Dimon turn around and say, oh, gee, things are back to normal? Back to normal? What's he, nuts? We're nowhere near normal. When you have your president doing QE, trying to print money, go out there and buy all these treasuries to drop these yields down so he could have a low yield on that $7 trillion of debt that's coming due. And then he's got his Powell, the head of the Federal Reserve, trying to move yields up. So that's why the market is not doing well. We got all this craziness going on in the market. Now, the one thing that may happen with the market because of this, believe it or not, is that we may have one big rally. That's right. Everyone's sitting here saying, okay, and I too, I've been saying for how long, this market's going to crash. There's no question this market's going to crash. I mean, you can't keep from 2008 to 2016, keep interest rates at zero. And that's what moved the stock market up. Interest rates, not earnings. Everybody's in there buying, tech stocks, keep buying. Everybody in the world was buying because you could go borrow money cheaply. So again, who made all the money was the very, very, very wealthy, not the top 10%, and not even the top 1%, the 1/100th of 1%. They got all the money. And most people don't realize that the wealth, isn't spread around. The people who make all the money is the people who earn $250,000 a year. They're doing great. They're doing fine. They're doing almost half of all the consumption. Think about that. They're doing about half of all the consumption. So that's not healthy at all. In fact, that's crazy. So all the money is really going to the real top end. So for Jamie Dimon, for that kind of a situation, Jamie Dimon said things are going back to normal. I mean, is it normal that the top 10%, those making $250,000, are responsible for half of the consumer spending? Is that normal? Is it normal for the president to be turning around and going back to QE, printing massive amount of money and trying to get these buy the bonds? Remember, you always go and buy bonds to drive down yields, drive down interest rates. And while you got the Federal Reserve on the other end doing the opposite, there's no normalcy to this market at all. And everybody's getting ready now for this crash, and there's going to be a big crash at some point. We're going to have a crash about 70%. There's no question about it, because we let this bubble go too far. I mean, it's out of hand. And why did we do that? Because who controls the Federal Reserve? The top 1/100th of 1%, not to be confused with the top 1%. I'm talking about the 1/100th 1%. And they're making a fortune. I'm talking about the Pelosi's and the people in Congress all making a fortune while everybody else is suffering. So, and the other thing that no one wants to talk about, we are heading into stagflation if we're not already there. They've been lying to us about not being in stagflation. That's why they always rig the job numbers. They always make the job numbers look better than they are. You remember March 23rd March 2023 to March 2024, they said they created 813,000 jobs more than they did to make things look good. No, they're scared to death of stagflation. So that's why they never tell you the truth about the job numbers. I don't care who's in office. Because remember, stagflation is when it is real slow growth. And right now, our growth is real slow. Prices are going back up. So you got slow economic growth, higher prices, and the third component is high unemployment. And boy, is our unemployment going to get higher and higher. And that locks us into stagflation, which is terrible because you can't get out of stagflation. That's really hard to get out of it. There's not a real cure for it. The last time we had stagflation was in the 1970s, but nobody wants to talk about it. And we're sitting here with PE ratios now in the S&P 500, and Jamie Dimon's telling us, hey, things are back to normal with a PE ratio 30 times more than the company's earnings? What's normal about that? What are you, nuts? And double the historic PE ratio of 16, that's normal for the S&P? No wonder the big institutions been dumping stocks left and right. The NASDAQ, the PE ratio, investors are willing to pay 42 times more than the company's earnings? What are you, nuts? That's 40% more than a historic PE ratio. 40% more. So we got some crazy stuff going on here. I mean, really. So, and again, the yields. We got to get these yields back down. We got to get them down. If this country wants to get back into housing, think about the housing. Our housing is, remember, we have the biggest housing bubble. We're right back to where we were. Housing bubble. We've had a big housing bubble. We got a big stock bubble, but something's different this time around. It's going to take this market down even more. We have a credit bubble through increased money supply. Yeah, increased money supply. That's all these guys have been doing, increasing the money supply. So they print all this money so they can buy treasuries, which is the same thing as taking cash and pushing it into the banks so the consumers can keep consuming. That's the worst thing that's been going on for the last 10 years. That's why we're in such a mess. That's why we got too much liquidity in the market. Because what's happened is we keep on printing all this money and keep on pushing it, into these banks so the consumers will go spend. And Powell uses that as a tool. What an idiot. He uses that as a tool to make sure that consumer confidence is up. Every time consumer confidence goes down, what does he do? Instead of doing what he's supposed to do, print money to increase business investment. That's what you're supposed to do. Print money, get it out there to loans, to small businesses. They can buy new equipment, build new structures that will increase their productivity. And then when you increase your productivity, you increase jobs, increase wages, and increase economic growth. No, they didn't want to do that. No, don't do that. Let's keep pushing the stocks up. Let's keep doing QE. Let's keep printing money to go buy treasuries so we can get the yields down. And then when the yields start going down, remember what happens. Powell can drop his rates with no permission, right down to zero. Remember, usually it works where Powell always, the Fed leads. The minute they push their yields down to zero, the Federal Reserve goes down. The yields go down. Everybody thinks that, okay, the Fed controls the rate at which it loans to banks, but they don't control the rate of the long bond, which is what you pay for your mortgage, we'll say. Here, matter of fact, where's that cut, Willie? I think I had one on that. They're talking about
the Fed doesn't control the 10-year yield. It did the opposite of what the Fed was doing over the last.
They controlled it.
Yes and no. It does not control it directly. It cannot move it up and down through administrative decisions. However, if it maintains a low inflation rate, and
let me tell you what he's trying to say. What he's saying is this: No, the Fed controls the short-term rate. That's the rate that the banks pay for money. And then when the doors open, they move that rate up to charge you when you buy a car or so forth. And then they say, well, but at least they don't control the long bond, the 10-year treasury yield that controls, what you're going to pay for a mortgage and so forth, or in addition to your house. But they do through QE. All they do is print money, print money, print money. They give it to the 5 biggest banks. They say, go out and buy a whole bunch of bonds, a whole bunch of treasuries. And then those treasuries go on the balance sheet. Those treasuries go on the balance sheet. But the problem with that is you kill the value of currencies around the world. Then all the countries start unloading their treasuries, which slows global growth, including our growth. And right now, Powell should be dumping our treasuries to try to get some value back, where we lost all this value with the dollar because of QE for the last, 15, 16 years. But he's not doing it. He's doing it in small increments. They got to get rid of the Fed. They got to get rid of him.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
If you want to invest your money and grow your wealth, listen to this.
Hi, I'm Phil Grande at philsgang.com. I get so tired of listening to the same garbage every day, listening to the fake business news network telling you why you should buy this stock, why you should buy, and they're always wrong. Join my gang, philsgang.com, free for 10 days. You're going to learn when to buy a stock and when not to buy a stock. Hey, years ago it was different. You could buy a stock based on fundamentals. You could buy a stock based on earnings. You could buy a stock based on PE ratios. Those days are gone. That ended with QE. That ended when they financially engineered the market in 2008. Gone. Now you got to follow the money. And we have the knowledge because we have the chart. Pro 2 color code chart tells you when to buy, when to sell, when to run like hell.
For a limited time, you can join Phil's Gang free for 10 days.
Check it out, philsgang.com. Get the truth, get the knowledge, and understand how the market really works.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And well, back to Phil's Gang podcast and radio show. So today we have some job numbers. No big surprise. You can't keep firing government workers. And I expect the job numbers, to slow up. But the most important thing right now is you got to stop listening to the noise. There's too much noise out there. No one's telling you the truth. And then when you have these TV shows, the financial shows, they just get worse and worse.
What do you think of the criticism leveled at the Fed for not doing more on the monetary front, or at the very least enabling monetary policy by expanding the balance sheet?
Yeah,
look, I think the Fed got started on the...
Yeah, expand the balance sheet. Yeah, we already went, think about this. We went from $4 trillion in 2020 to $9 trillion now. Remember, $4 trillion to $9 trillion from 2020 to 2024. We're in 2025. That's a killer. That kills the economy. So all that does, it puts inflation into the economy. When you keep printing money to expand the balance sheet, you keep printing money to buy treasuries, and those treasuries go on your balance sheet and you're holding them there. It's the same thing as holding cash. When you hear they're holding treasuries on the balance sheet, most people don't even know what that means. What it means is that you have on your balance sheet the treasuries. Think of it as cash, all this cash ready to go. And Powell, every time the consumer confidence goes down, what's he do? He takes that cash and he shoves it into the economy. He shoves it right into the banks. I'm sorry, then that money goes out through the economy through, again, spending. And he thinks that's going to grow the economy. All that's done is grown debt, massive debt. We're not expanding the economy. And he does the same thing over and over and over. The minute he gets a whiff that the consumer's sad, he hasn't got confidence. He goes and calls up the treasury, hey, print me $30 billion. I gotta make the consumer happy again so he'll go spend so we can keep growing. But we don't grow because our debt grows. It's just stupid what these people do. So what we've been doing here at Phil's Gang is just keeping our heads down and follow the money. If you follow the noise, you're not going to make money. You never do. That's like people who buy every stock that someone on TV talks about, Kramer or somebody on CNBC, and the one people write it down and they go and they buy shares, buy me some shares of this. I heard it was a great stock. 80% of people don't make money in the stock market. Think about how stupid that is. 80% of the people don't make money in the stock market, yet we've never had the percentage of tourist investors that we have today. Now, there's the retail investor, and then there's the tourist investor. The retail investor, he's not professional, but he's willing to learn. He's willing to understand how the market works. He doesn't gum up the market. We've had an increase of 65% of tourists. Now, who are these people? Very seldom do they buy a stock. And when all of a sudden when we hear NVIDIA, everybody's getting rich on NVIDIA, everybody's getting rich on Meta, they jump in and they keep buying and buying, and every time the stock goes down, they don't know what they're doing. They go in and buy more. And then when the people on TV tell them every time the stock goes down, buy more of it, keep cost averaging down, you're going to get rich. My God, if NVIDIA was at 200, now you can buy it for 150. You're so lucky. Really? Yeah, I can buy it 150 now? Yeah. Remember when you paid $400 for it? Well, now you can buy it for $150. Oh, wow. Gee, thanks for telling me that. I mean, the market's gotten crazy, and we're not growing the economy. Our economic growth, think of it, in 2021 was 2.1%. 2024, the end of 2024, was 2.8%. That's not growth. That's stupid. That's just totally stupid. And the other thing that people don't realize right now, you have four sectors that hold up the whole S&P, the entire S&P. There's four sectors that are important. And by the way, we just did some of our numbers. We just finished up. We had some beautiful, and you got to learn how to short. We just shorted. We've been shorting GEV. GEV is part of GE, and it's AI. It's their AI power company, and we shorted that. And we're up on that short right now. We're up on that 20%. We did another one, same kind of company, VST, and that one we shorted, and we're up 20%. No, 33% in that one. And then we shorted NCLH. NCLH, that's the cruise line. And the cruise line, we're up 25%. Carnival Cruise Line, we shorted that, we're up 17%. Tesla, we nailed that one. That was an easy one because I don't know if you can see my chart here or not, but we follow the money. And 25 years ago, I designed a chart so we could follow the money. When you look at a typical chart, a generic chart that everybody has, it's silly. Because, for example, you'll see going up right here, you'll see green, red, green, red, green, red. All that reflects is if it's the candlestick's red, it means it closed that night on a low. If the candlestick is green, it closed that night on a high. Well, what the hell do I care about that unless I'm a day trader or I scalp stocks? I could care. I want to know, is the money going in? Is there more money going in or is there more money coming out? Now take a look at the difference. Over here, look at the difference. When money's coming out, it's not one night you got green, the other night you got red. No, it's solid red. And even when the market's going, the stock is going up, it will remain red, warning you, don't buy it. There's not enough money in it. Because someone, let's say, takes a look at a stock that's at $84, and all they hear on CNBC, buy, right? And it starts going up. And they go, they're all excited. It went from $64 to $87. Wow. What they don't realize is there's not enough money holding that stock up. So one morning you can wake up and you lose it all. The beautiful thing, when money is going into it, it will turn green. And over 225 or 250,000 people have used this chart over the last 25 years because it makes sense, because you're following the money. You're not following the noise. So, and that's what we've been doing. So it doesn't matter to us what Trump is doing, that Trump's involved now, okay, with QE, trying to buy treasuries to get those yields down so that he has that $7 trillion debt. He's hoping the yield will be down to 3%. And then you got the other debt dope, Powell, he's in there, right? And he's doing tightening. He's trying to pull money out of the system. So yields are going up. So Trump's trying to get yields down. Powell's trying to get yields up. So if you sit and trade, listening to brokers and all this, and people on TV and telling you which stock to buy, no, it's all noise. But when you just follow the money and turn that noise off, who cares if Trump is trying to get yields down, and who cares if Powell is trying to get yields up? That could drive you crazy. Instead, here's our stock, CCL. We got in it. It went from green to red, and we knew to short it, and we did beautiful on CCL, Carnival Cruise Line, 17%. And Tesla, same thing. And same thing with NVIDIA. Look at Tesla. It went from green to red. Look at that. So it doesn't matter to, I don't even want to hear the conversation, what's going on. You're better off just turning off the news, the financial news. Just get rid of it. Turn it off. And learn how to follow the money. Learn how to follow the money. And then that's when you start making money. And then you start making money when you start shorting. 401ks have been a total failed experiment. That's not me saying it. That's Betta saying it, who's the father of the 401k. He's the one that designed the 401k. And he's going around there, don't be in my product, 401ks. It's failed. And if you ever put the S&P against your 401k over 10 years, you're always making more money by being in the spiders. All you have to do is be in the spiders. And when spiders go up, you buy. When spiders go down, you short. It's not hard to learn how to short, especially when you got a chart that's telling you when money's coming out. Your chart, you don't know. Because one day it's green, next day it's red. So, and the results that you get over 10 years are far superior on your in spiders, the S&P. You can look at it. You can look at it 10 years. You can look at it 15 years. You can look at it 20. The 401k is a joke. It's just a true joke. It really is. So it's just almost impossible to make money with 401ks. And just as you start making money with a 401k and you feel good, bam, you get a correction, and you sit there, and the market's going down, and you sit there and you're panicking. What should I do? What should I do? And what is your planner and your broker's trained to do? To hold your hand, to hold your hand. So we're coming up on one of the biggest crashes ever in history because we've increased money supply. Here, let me see if I can get that chart. Can you get that chart up for me, M2 money supply? The M2, I'll put the chart up. This is ridiculous. The only thing that's pushed the market up was continuing to print money, and then shove it into the banks and lower interest rates so people consume and consume for 16 years. Look back here. Look what they did. And the people who made money was the smart money. Okay? So if you go back here to 2001, the dot-com, there was only $5 trillion in the money supply. Now, if you move it up, now when we had the housing and financial crash, it went now from 7 trillion, it started to climb. By 2015, we had 10 trillion. And then we had 12 trillion by 2016. Look at this. This is going nuts. When we hit 220, we went out of our minds. The COVID, we went from 15 trillion to where we are today on the balance sheet, almost 22 trillion. You know what that money's used for? 99.9999% of people don't know, but I'll share it with you. That money is used, they print all the money, the Fed, they give it to the 5 largest banks in the United States, and they tell those criminals to go in and buy all the bonds they can possibly buy, and then the yields go down, the 10-year Treasury yield goes down, and then the Fed immediately drops their rate to 0. So now you got 0 rates. So all that, the 0 rates, all the companies can borrow money at 0 rates, and they can buy their own shares. And so what's happened, just like what happened with Cisco, okay, Cisco went up 4,000% before it crashed. Well, guess what? Where we are right now with NVIDIA is up 4,000%. 4,000%, which means it's getting ready to crash. So all they do is print money to buy treasuries to get the treasury yield down so everybody can buy a house, everybody can add to their home, they can go buy a vacation home, keep on getting that yield down. And then the Fed, they'll take their yield, drop it to 0, and they loan it to the bank. So here's your money, I'll give it to you free. And then they lower rates so you can buy a motorcycle and you can buy a boat and you can, this is on minimum wage, because there's no interest. Those were some days, weren't there? But see, it doesn't work. Now, the reason why Powell is no longer doing QE, no longer cutting rates, he can't, because it'd be over. That's why, so when Jamie Dimon says, boy, things are back to normal, and you got the president there doing everything he can to push rates back down, and Powell doing everything he can to get rates up, where do you think this is going to all end up? You follow the money, join my gang, and learn how to short. See you on the chart.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's the